Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is August 2nd edition of Market Outlook. Don't forget to sign up for this, and you'll get it free delivered to your inbox every week at www.marketgauge.com. So, overall, markets more sideways action, pretty good close to the month of July, correcting the sort of disastrous month in June. So let's take a look again. Key components here of the S&P 500 is that we're still well above the 65-week moving average. And look at this compression. And down here you can see our average directional range indicator creeping up a little bit, but basically really at absolutely low levels. Look at the compression, sideways action, not generally good for trend traders. Let's take a look at the daily chart. Now, interesting, you can see here this yellow line here. This is the volume. Not one day over the last week's rally did we have a accumulation day, right, where the volume of the current day on the up move was greater than the down. So overall volume not bad for the week, especially it's a summer month, but nonetheless you can see we're sort of trading in this sideways channel here. That pretty much defines it depending on how you want to play it out. But again, overall, this is the channel that on the daily charts, the 200-day moving average comes in around 207. So that's exactly around the area where we bounce from. And notice, even though we closed relatively weak on Friday after trying to mount a rally, what happened? We closed still above that 50-day moving average. Doesn't seem to be all that critical, although we do look at phases that way. So we're back into a bullish phase, but the middle of the trading range, and that really is what we're focused on, that trading range. So longer term trend certainly still intact. Can't really say more than we are in the middle of a really compressed sideways action. And taking a look at that, talking about sideways action, it's not surprising. Look at volatility making yet new lows on the VIX, although not frothy enough to generate a cautionary signal, as we're not at the bottom end of the Bollinger Band. And as you can see, generally speaking, when we get to extreme optimism, that's generally when we hit the bottom of this red band. You got the bounce right in July on that sell-off, and of course now with the rally back down to sideways. Extreme sideways action means compressed volatility, so it's not surprising volatility acting as the confirming indicator. What we like to see, though, is these indicators at extremes. As you can see, although we are at the lower end, actually at the lows on the VXX, the volatility index, we are not at the lower end of the Bollinger Band. We got some plenty more here on the downside. Let's take a look at the volatility ratio. I like that. That's a little bit more predictive. Interestingly enough, we're back over the overbought range where it generated a sell signal. So net slightly negative here overall on sentiment, right? Short-term volatility relative to long, generating a potential sell signal here. We're definitely in an area where the sentiment is looking a bit frothy. Let's take a look at the McClellan oscillator. About last week, right on the lows, we basically said that the oscillator here looks at about 2 or 3 weeks or so. The McClellan oscillator definitely hit an oversold level and bounced, and we did get somewhat of a rally. Right now, we're in the middle of the range, so still working off that oversold condition. This I would consider slightly positive, as we are still in a positive momentum situation. So overall sentiment, pretty much looking at the VIX and the volatility, sort of slightly negative. In terms of the McClellan oscillator, looking at the breadth a little bit more longer term, is slightly more positive. Let's go to bonds. As we mentioned, bonds had been looking pretty good last week as they moved over that 50-day moving average. So we were looking for a potential move back up to the 200-day moving average and the top of this channel. So we're not quite overbought yet on the daily charts, but we are at the top of the channel. Wouldn't be surprised to see it move out over there and possibly try to take out the 200 or attack it and then lose some momentum. So interesting action there. What is, as you go and drill down to the different fractals, or what we consider time frames here, look at this. The 65-week moving average, which is the longer term trend. This is the 23-month moving average. That's the long-term trend for bonds, not the super long-term, but pretty long-term. 23-month moving average held that very, very nicely. So longer-term downtrend in rates, uptrend in bonds, still overall intact. So it'll be interesting to see. Market is definitely telling us something different than what the Fed is saying. Fed is saying it's going to raise. Meanwhile, the market is not responding that way. So as we got oversold on the monthly charts, right at the one of the key moving averages on the monthly, the market held, which we had been pointing out for quite some time. Let's take a look at IYT, transportation. Interesting. Transportation, similar scenario, right? This has been sort of the weak sister, but looking at it on a long-term basis, right, the monthly charts have held nicely, right at that 23-month moving average. Let's take a look at the daily chart as well. Daily chart on IYT has moved into what we call a weak recovery phase. Why? We are now trading above the 50-day moving average, although it's slanting down. So again, this is the highest close in the transports since mid-June or so. So that is interesting, because this certainly has been a laggard and doing actually better than the overall indices as well. So nice rally. The fact is that we were concerned about further weakness, and we did stabilize here. So that is definitely a positive sign, even though some of the breadth figures overall are not as good as we would like. A little bit of strength in the McClellan, but some of the shorter term stuff still not looking all that good. Another thing to note is XLU, which is utilities, also rallying nicely off the lows, moved into a recovery phase. So this is obviously very interest rate sensitive, moving along with that. Another sector, home builders, XHB, actually moving out to new highs, right? We basically got a new closing high for the year in XHB, which is a consortium of different stocks, home builders, and stocks associating with new construction. So interesting. The most interest rate sensitive sectors of the economy seem to be doing better in conjunction with the bond rally. So obviously the Fed talking about raising rates certainly hasn't hit the most interest rate sensitive sectors of the economy, with the exception of gold. Gold barely was able to rally. All we were able to do was really stabilize in an oversold condition here. So we sort of worked it off. You can see the RSI here and the 50-day Bollinger Band basically hit oversold. Certainly coincided with the bottom of the Bollinger Band as well. So all of this coincided with this temporary pause, but not much cheer here in the overall situation in metals, which are also very interest rate sensitive. Okay, one last thing to look at, of course, is the euro. In conjunction with the concept that the Fed is going to raise. Let's see how the euro is done. And as you can see, last week we had pretty much sideways action and closed the week under the 50-day moving average. We attacked it, closed under it. We're in a bearish phase overall. More pressure on the euro as the U.S. looks to raise. So confusing action, right? Interest rates lower here in the U.S., although news is that we're going to raise rates. Euro traditionally would be under pressure, which is true, as is GLD, but interest rate sensitive sectors such as utilities and home builders acting on a relative basis pretty strong. So jury's still out. And again, just want to remind you, let's just go back to the S&P and realize that critical support definitely around the recent lows of 204 or so, which would take us under that 200-day moving average. Let's see, one last thing. Okay, let's cover the Dow. And as you can see, again, the Dow attacking that rising 200-day, but closing underneath. So that is also under pressure as well. If we can start moving potentially above it and clear the 50-day, well, we'll be back into the mid part of the trading range as well. So watching the weakest link here is important. Renewed weakness under 174 in the DIA is also going to be viewed as really important support, and that would confirm yet the breakdown under this 200-day moving average. And what you're looking at here, a potential double bottom if we can clear above it, or though we break beneath that 174 level, not going to be looking too pretty. Thanks. Bye for now. See you next week.